Good afternoon, good morning, wherever you are. We're going to go ahead and start right on time. Usually wait a little bit, but we got a lot of people coming in, so I think we could go ahead and get this started. How you doing, Kristen?
Good. How are you? I need to get off I know all of my credit unions so well, so I got to close the attendees tab so I don't see all my friends going on there and then I get distracted. I'm good. I'm good. It's
Yeah,
been a while since we've done one of these and it's nice to get back into it.
it is. And you know what? If there's anything I'm used to, it's you being distracted while I'm trying to talk to you. So I'm not offended.
you know, but that's why you love me because
Yeah,
I have the crazy ability to be able to be like in all places at once. Yes,
that's
I'm
right.
happy that we're back doing this. This is fun. We've done a lot of these over the years and a lot of different iterations, so this one's gonna be a fun one.
Yeah, and this one in particular is one of my favorite things that we get to talk about because we get to talk about data, which is my love language is data, and
It
it's
is.
it's it's an abusive relationship for you, but nonetheless, I'm excited to talk about this because we're going to talk about a report that we originally did back in 2022. And we thought, it would be great to take the temperature of everyone again on the same thing and then sprinkle some kind of new questions into the mix. And so that's what we've done. And we just published it. It is our 2026 consumer preferences and behavior study that's geared specifically towards financial institutions. I'm going to pull it up here because we got some slides to share. Yeah, so this is the 2026 version. If you're on this call, you should have a copy of this report because you got invited to the webinar by downloading a copy. But let's just very quickly go through what's in this report, and then we're going to pull out some of the slides that really stood out to us that we can elaborate on, talk a little bit more on, give a little bit more insight into because we think they're really telling for the credit union space and the FI space in general. So, real quick, if you're not familiar with Gear, we used to be known as Web Strategies. We rebranded as Gear mid 2025, and we are a performance marketing agency that helps community based financial institutions punch above their weight. So, we want those community based FIs to be able to compete with the big banks of the world, right? And the neobanks that are out there by bringing a more progressive approach to marketing and technology and marketing automation and so much more. So we've partnered with over 120 credit unions and banks over the years. We are a HubSpot Diamond partner. Our team is about 45 people strong now, and we are SOC 2 Type 2 compliant as well. We know that's something that really matters to the FI world, and so we want to make sure that we were as secure and compliant as possible. Let's talk about the report a little bit more before we get into the details. Okay, so this report, again, consumer research and banking preferences and behavior. So we're asking a bunch of people what their preferences are when it comes to the banks that they use, what they look for when they're researching a financial institution, how they research a financial institution, all that kind of stuff. This report was really built to help credit unions understand what's going on out in the marketplace, but we think this is just as applicable to other FI community based FIs as well, and you'll understand once we get into the report. When it comes to segmentation, like how do we break down the data? Well, we've got a lot of charts and graphs in here. The way we ended up breaking this apart was usually based off of um, if they were a credit union member or not, or if they're using a credit union as their primary financial institution, and or if they're over 45 or under 45. So we sliced and diced this a bunch of different ways depending on what we were really trying to hone in on for that particular question. The raw data, though, if anybody has a very specific question, we could go back into the raw data, get you an answer on that. We've already had several people reach out and wanting to see something a little bit different than what we put in a report. So that option is available to you as well. You could just message Kristen or myself, and we'll get that to you. We're also comparing this data to 2022 because we have seen some things shift and change, which is quite interesting and a bit telling at times. In fact, one of the first charts we're going to look at shows, quite a meaningful increase in preferences in one particular area. And then, of course, we throw some commentary into this as well.
Yeah.
So, information for the nerds like myself, the methodology here, N of 1,000, sample size of 1,000. We did our field work in Q4 here. 95% confidence interval. So this is pretty reliable, pretty tight data. And then when we are collecting the data, we want to make sure that we had an even split between credit union members and non-credit union members. So we want to hit 500 of each. Okay, so that's how the data breaks down.
Yeah.
All righty.
One thing that I wanna highlight here only because it's new and I wanna make sure everyone knows is that our new SOC 2 that we got. So,
Yep.
just wanna make sure that everyone knows that we have our SOC 2, we're compliant, and
All right. The first thing we want to talk about is online bank adoption. So we're talking about platforms like Wealthfront, SoFi, Chime, Current, Robinhood now is getting into the online bank world. And we want to know, what do people think of these online only banks, neobanks, right? They're not actually banks. They're tech platforms that have a network of banks underneath them that allow them to offer up financial products. And we wanted to know, what do people think of these? How do they consider them in their shopping process when it comes to financial products? And for this one in particular, we want to break down by age because we did see quite a bit of difference between age groups on this. The first question that we asked here was, are you a member of an online only bank? So are you a member of Wealthfront or SoFi, Chime, Current, Robinhood, Betterment, those types of neobanks? And we're breaking this down by age, the under 45 category, the older 45 category, and the 2022 comparison to 2025. And so what we're seeing here, no surprise, if you are under 45, you're much more likely to use an online only bank both in 2022 and 2025 by about double or so roughly. Okay. What's really telling and what stood out to me is the growth of online only bank membership for those 45 or older. So it was about a quarter of the population that we surveyed in 2022. Now it's about a third of the population. All right. So that older category, which is where we see a lot of legacy credit union members in particular, we see them becoming members of online only banks. Now, we're not asking about PFI here, so we're not breaking it out at that level of detail for this particular question. However, it is worth knowing that we're seeing this trend in the older demographics. And for those who are not as familiar with these neobanks, because they're more of a tech platform with a network of banks, they can offer a lot of times better rates than brick and mortar FIs can offer. So, for example, when I pulled this data just last week, I saw uh, 3.3% interest rate on the combined checking savings accounts offered by Wealthfront and SoFi. So that's a product that's a little bit unique to these neobanks, where basically your checking account earns this like insanely high interest rate because it's also a savings account. It's technically a checking account, but it has savings rate benefits to it. 3%. So you have your money sitting in there and you're earning 3.3%. Also, some of these neobanks are entering the loan space as well. Wealthfront is entering the home loan space, saying that it can offer interest rates about half a point lower than the national average. I didn't see any of these neobanks offering auto loans when I looked, which is a good sign. That is the bread and butter of credit unions, as we know. But the other thing that these platforms offer is robo investing. So you could have your primary checking account on these platforms, and then with like two clicks, you can move money over into ETFs and start investing. You can open up an IRA on these and start investing with just a couple clicks, and it happens immediately, right? Because it's all built into this one platform. And then finally, because these platforms are tech first and they're so tech forward, the user experience is much like what someone who's younger would expect from an online platform. It's smooth, it's quick, it's fast, it's intuitive, it's responsive. And so, we do see this as a considerable threat or competitors, as I know all the credit unions do as well. And again, we're seeing a trend where more people than when we surveyed 3 years ago consider themselves to be members of these online only banks. So, Chris, I'm not sure how often this comes up in the conversations you have, but this is one I would certainly be looking out for.
Oh, for sure. I mean, every credit union cares about getting that under 45 demo, and it's interesting because the under 45 demo is what everyone wants, but the over 45 demo is are the people who are the healthiest members, right? They have the
Mhm.
most financial security, they have more money, they're not just going to join and drop just to save, a few interest points on an auto loan. So it's an interesting dichotomy that we need to pay attention to. But this is very telling. It's very telling since I fall into the older generation bracket. And, I look at my own behaviors all the time, right? I look at my behaviors, I look at my kids' behaviors, and it certainly raises the point for us. And we fall right into these numbers in the category.
Yeah. Yeah. And again, I see the biggest competitive threat here to how credit unions think about user experience, right? Because they need to be benchmarking their user experience to these neobanks, in
Oh, for
my
sure.
opinion, right?
And there's
So,
nothing more important than the mobile, right? I mean,
right, and we'll get into that with some of these too. So,
totally. Yep.
yeah, online only bank membership has gone up in the last few years, even for the older demos. All right, let's hit the next slide. This is nothing to do with mobile banks. This is how do people find financial institutions? So this question was around what is the first step you take when researching a financial institution? And no surprise, online search was the most likely way that both old and young, sorry, Kristen, below 45 and over 45
You're not far.
research providers.
Yeah.
I got time. I got time. But anyway, online only search. So going to Google, right? Primarily, Bing as well. That's the primary way that people are researching a financial institution. But we introduced the LLM into this year's survey. And what we're finding is now LLMs are basically the second most likely way that someone under 45 researches a financial institution. ChatGPT, Gemini, Claude, there's several others, and we did our own research on this, and we've written blog posts about this that we could maybe also share afterwards if you're trying to wrap your head around, how do you show up in LLMs. We're going to do a webinar on showing up on in LLMs, but this is something that we're paying a lot of attention to because it's certainly entered kind of the lexicon of how do you find something online these days? Oh, I use an LLM, right? I go to ChatGPT. But search is still the dominant way. You should not, in our opinion, abandon a search strategy for an LLM strategy. And furthermore, we see search as very much a performance channel. So if somebody goes to Google, it's because they're about to go take action. Whereas if they go to LLM, they're probably a lot higher in the funnel. It's more of a branding channel and an awareness channel. And they may not convert directly at that point. Or if they do, they're unlikely to click a link from an LLM and then go over to your website. We've done research on this too. That's on our website. And if you go to your Google Analytics, you'll see the same. It's like a minuscule amount of traffic coming from ChatGPT. There's several reasons for that. Again, one, it's just not as likely that someone's going to click out of these platforms because they're captive platforms. Sometimes the tracking just doesn't pick it up and it throws it into direct traffic. Also, sometimes someone might like research a brand and say, "Okay, I like that brand. I'm going to go check it out." Then they go to a search engine. Then
Right.
they type your name, right? So these are the pieces that we're all still trying to put together and better understand. But nevertheless, I think it certainly warrants paying a lot of attention to this. But other more legacy channels, go to the website, go to a branch in person. That's still the second most likely way for somebody who is over 45, right? And social media less of an impact, especially on that older demo. But yeah, LLMs have entered the scene. Going to a website still very, very important for both. It's kind of tied for second, just maybe below with third. This is all plus or minus a couple percentage points anyway. But yeah, the main takeaway here is that search still dominates, but pay attention to these other channels too. Kristen, anything you want to add on that?
I do. And we got a question that I want to make sure that we touch on because it was specific. Do you see it? Do
Yeah.
you,
All right. So do you see the lines between search and LLM blurring in the near future? Yeah, it's a good question. I do because I don't think we know how this whole experience is going to level off. If you use ChatGPT, that is its own platform, and it's a totally different experience. But Google has kind of incorporated Gemini directly into the search, and now you have these AI overviews. Personally, anecdotally, just what I found is for a while, I left the search bar on my own computer and I would go to ChatGPT for answers. Once Google caught up, I'm going back and doing the exact same thing I used to, which is go to like the search bar, or the URL bar, which is like, you type your search in there, hit enter, and it pulls up Google. And so, how is this all going to settle out in terms of the user experience? Is that the final interface that we're going to have with this for a long time? I'm not so sure. I think we may become more hands off potentially in the future with this. It may get more incorporated into operating systems, and we're not quite going through browsers the same way. So, Judd, I think it's still really early to tell here, but Google is very much kind of a blend of the two, but Claude and ChatGPT are quite independent of each other. But I think we got to see what the next year or two brings with this. In terms of tactics, I'm not sure if this might have been implied. That's a separate webinar. How do you get ranked on search engines versus LLMs? There is some overlap, but there are some things that are quite distinct from one another. We're going to talk about that in an upcoming webinar and give a little bit more insight into it. Okay.
Yeah.
All right. Let's move on. Let's talk about AI some more. Younger consumers demand AI integration across the entire banking journey. So, this question was, how would you like to see your financial institution incorporate AI? And we see some big differences between under 45 and over 45 on this question. So if you're under 45, you're like, yeah, give me an AI assistant, right? Like, I come to your website, I have questions, I don't have to call a real person, so I can use the chat bot and get answers to my questions, whether it's product related questions or maybe account related questions. I can just talk, get answers, I'm good to go, right? 38% would like to see that for the under 45 crew. The older 45, it's like that number is cut in half. Also, using AI to detect and prevent fraud. Who doesn't want more of that, right? And I feel like you're going to have to fight fire with fire here. So, as we see in the next year or two, probably a surge in identity theft and a lot of issues around compromised accounts and information, because people are going to be able to create these AI armies basically to go in and try and steal information and hack into accounts or whatever. Like, it could be a big deal. We're probably going to want to see AI fight back on that, right? That might be something that's beyond a two-person fraud team in a $250 million credit union, right? So I'm not surprised to see that one, and that number was actually pretty close between the two age groups. Everything else is quite different as you go down the list. I'm not going to read it all, but the other one that did stand out to me is that half of the people over 45 are like, no AI. I don't want to see any AI in my financial institution. There are a lot more, they have different concerns, I think, or maybe just concerns around the technology in general. Uh, my opinion on this is, look, you can choose whether or not to do it. The neobanks are going to do it, and they're going to do it really, really freaking well. And so when you're talking about getting new members and trying to, get more, sell more products to existing members, turn people into PFI members, etc., they're going to compare your experience to the neobanks, to the alternatives who are not nearly as conservative as some credit unions choose to be. So, I mean, that's ultimately going to be your choice, but I highly suspect there's going to be a lot of really interesting AI usage, AI customer service within these more progressive type neobanks. Then they're going to come to the credit union, not get that experience. I'll let you be the judge for how you think they're going to interpret that. I don't think it would be a great user experience on the credit union members' end. All
Also
right.
something
Yeah.
that comes up all the time, all the time.
Mhm.
And, definitely for me, it's like, I hear the last question a lot, like, afraid of AI and what AI is gonna do and how it's gonna be. So, I'm really curious to see what it's gonna do in the long run and how FIs are gonna adopt to it.
Yeah.
Yeah, and I think
I don't see it as having a choice.
It well, certainly isn't a choice. It's like the old days when Facebook came out, you remember? And I would get people like, "I don't wanna advertise on Facebook because, it's a security risk." And it's like, "Really?
Uh,
Because everyone else is." And they're driving lots of traffic. So that was like the 2010 conversation. What's
yeah.
the conversation now, you know?
Yeah,
And
yeah, and I'm sympathetic to the concerns, absolutely. It's just we have to kinda look around at what the rest of the world's gonna be doing, the user experience it's gonna create, and even if there are those security concerns, then I think the main question becomes how can we alleviate those concerns,
yeah.
right? Versus just saying we're not gonna do it. All right, let's talk about perception. Who's best? Hey, it's the Olympics right now. We're all about who's number 1, who's number 2, who's number 3, right? Uh, okay, so we wanted to ask people who is the best at what? We gave them choices. We gave them credit unions, online only banks, traditional banks. And we asked them who's best at these different things: customer service, mobile app, accessibility, branches, online experience, the variety of offerings, financial education, and community involvement. So again, this is perception, right? Because this is all fairly subjective. We'll get into rates in a little bit. Rates are less subjective, but subjective stuff, right? These are the value drivers. So who's best? All right. So the first group that we broke this out for: credit union members, but the credit union is not their PFI and they're under 45. So get that persona into your head. Under 45, like myself, not like Kristen. Credit, they're a credit union member, but they don't use it as their PFI. All right. So, you're friends, but not more than friends. Okay. Who's best at what? And we got the 22-25 comparison here. And as you see, it's a bit of a mixed bag. Credit unions are the green dot. They think credit unions are the best at customer service.
Sweet.
Cool. Mobile app, online only banks, not a surprise. Probably because they use online only banks. If the credit union's not their PFI, that would be a fair assumption for some. Accessibility, traditional banks, local branches, banks are better there. Online experience, no surprise, online only banks. But credit unions have the best variety of offerings, better financial education, and community involvement. Those are the best. All right. So
Yeah.
again, mixed. They have some relationship with the credit union, so maybe they get exposure to some of these things, right? Well, let's look at who's the worst amongst the same group. So again, under 45, credit union member, but it's not their PFI. Who's the who's the way we worded this institution least often rated as the best, so maybe considered the worst. All right, little jumpy wording there. And what's interesting here is sometimes the online only banks show up quite a bit, like these blue dots, like customer service is not as good. And I can understand that, right? You're calling an online only company, right? Like we all know what that experience is like. It's hard to get someone on the phone, right? You could go down the list. So, but the point is that this looks like a traffic light. There's all different types of colors, right? They don't lean too heavily in one direction or another. But let's look at another group. I'm going to clear my markings here. So credit union members under 45 who do use the credit union as their PFI. I mean, this is the holy grail, right, Kristen?
Right.
Under 45, the credit
Not an
union,
indirect
that's how I
member.
bank.
That's
Yeah,
right.
not
This
indirect.
is it. Yes.
Yes, I'm all credit union, right? And look at it. Credit unions are everywhere. They win in almost every category except online experience. Again, understandable, right? But most accessible, mobile app, local branches, customer service, variety of offerings, financial institution, education, and community involvement. Just almost runs the board, right? Who's the worst? It's a combination of the traditional banks and the online only banks. But what I see here, Kristen, when I look at this, is that if someone is under 45 and they use you as their PFI, they think very highly of you. They think credit
100%.
unions are the bee's knees, as the kids say, I believe.
Yeah.
Right?
Uh, in your age group, they say that. But
Yes.
I will
No one says that.
I I totally agree with you, and that too is just the overarching like, that's the argument, right? Like, once we get them, they love
Yeah.
us, and they'll never
Right.
leave us because they hit everything that's important to a younger member, the feelings, the experience, the community involvement, the giving back. I mean, they're ace in the hole. And it's
Mhm.
just we need to get them. And, you know,
Yeah.
we described before the online only banks are capturing the audience solely because they are where they are.
Yeah. Exactly. Okay. So I apologize if Bee's Knees was a little bit too aged. Credit unions are lit. They're dope. Credit unions slap.
Oh my
I
god.
think
Do you
yeah.
know what my kids would say if they were here? My kids would be like, "Don't ever say that again and stop talking."
No, they
Uh,
would say Chris is fire because I am.
oh, well,
Anyway,
fire is no, they probably would say my mom is fire because she's listening to this. No.
fair enough. All right, let's move on from this insanity. Let's look at non-credit union members who are under 45 years old. So these are the ones who don't think credit unions are dope, lip, slap, bees, knees, etc. Those all belong in the same category, clearly. And here's the thing: it's a mirror image. It flips entirely, right? Credit unions are not considered the best at anything amongst those under 45 who are not credit union members, right? This is the one that I mean, I see opportunity, I see concern, I see opportunity here as well, right? But when kind of juxtapose these two slides, so this one is credit union members under 45 PFI. This is the opposite, right? Kristen, going back to the point you just made, it's like the problem probably isn't the product, it's the narrative,
Yeah.
right? Because we've proven that once we have them, they love and they experience the credit union in full, they
Mhm.
think very highly of us. But if they're not, their perception, again, this is perception,
Absolutely.
is no, credit unions are bottom of the list on all these things,
Yes. And
right?
it's, and it's just because of what's showing up right where they are. And that's just what
Mm,
it is. That's the truth of it all. And who's hitting them with what knowledge. Also, the
mhm,
perception of these neobanks, and they're doing all of the things, and they're meeting them where they are, and they're, guiding them through their financial behaviors with one click. And I do think a lot of it is perception because once they get involved with it, they're not hitting them where with what matters to them, but that's something that they
uh-huh,
also have to learn, right?
yeah.
They have to experience for themselves before they try something else.
So maybe Kristen, the way to think about it is a credit union's biggest competitor isn't necessarily traditional banks or neobanks. It's this assumption that they're irrelevant, right?
Yeah.
But something that we can, with messaging, potentially fix, right?
Exactly.
And not to just market to members exclusively, but also to the skeptics, but realize the headspace that they're probably in when we're showing to them, knowing that
Yeah,
this is the starting point, right? Because you got to start with where people are. Okay.
totally.
All right. So again, this was a lot around like subjectivity and the value drivers. And as you could see, it's all over the place depending on their experience with credit unions. But what about the thing that credit unions are so well known for and considered the best at, fees? Well, who has the most favorable fees? This gets interesting again. It flips, right? Credit union member PFI, non credit union member. It's the total opposite. If you're a credit union member, you think credit unions have the most favorable fees. If you're a non credit union member, you think they have the worst fees. How can this be? Right? Fees are fees, right? Fees are fees. Now, in any given comparison between one FI and another, the credit union may lose out, but we know on average, credit unions have more favorable fees, right? Particularly CDs, auto loans, and in many cases, home loans too. Like there's national data on this kind of stuff, right? But non-credit union members don't see that, don't experience that, just don't believe that for whatever reason, right? So this is just reinforces the fact that credit unions need to continue marketing to the skeptics,
Yeah.
particularly around the areas where they're definitely the better option. I wouldn't necessarily recommend going out with the things where you're a bit more mid, as the kids like to say, but the things where you are more lit. So, the lit versus the
Oh,
mid. This is taking a very unplanned turn.
oh my god.
This has
It's
never
so
worked out when
funny.
we talked. So anyway, if you
So
truly
funny.
have the better rates, if you know that you truly have the better rates, I think that's safe stuff to go after the skeptics on because you can prove it and it is objective and it is true. If you're trying to convince somebody that your so app is great and you're marketing that, they're going to see that and realize that's not so good compared to the other thing they have. And what have you done now? You've only reinforced the fact that you're not so great.
Mm.
Right? Right? So if you market with something that's not very strong to a skeptic, you're only going to reinforce what we're seeing here. You want to avoid doing that. So make sure you're going out with the things where you know you're clearly the best or hyper competitive. All right. Well, let's continue this theme of younger members that I've set up so well with all of my youngin vernacular. Kristen, I'll let you take the next batch here.
Yes. So, younger members. Okay. And this is tricky, right? Because it's the most important thing to credit unions to get new and younger members. But as we've already established, we're challenged with how they find you. We're challenged with what they're bringing to the table, right? They're not as wealthy as the over 45 demo like myself. So they're not as established financially. So we need to make sure that we're doing the things to get them and help them grow financially. And we've talked about this for as long as we've been doing this, the last 12 years, that once they get we get them and they come to us, they love us. And
Mhm.
also getting over that barrier of I can join a credit union and I'm eligible to do so. So, digital channels increasingly capture more youth while older consumer visibility fades. So, we're seeing it's not just where the credit unions are advertising, but who's seeing the ads, right? And it's super important. Like we always say, show up where they are, show up where they are, show up where they are. Visibility among younger consumers isn't happening by accident. Credit unions are going to the channels where they are. So, the short video format, like, if we all have kids here around the same age and their faces are buried in the phone, what apps that they're on, and so we advertise to them, and we're also speaking their language and getting them. So social media, you can see the social media increase among the consumers under 45. YouTube jumped significantly, of course. I mean,
Mhm.
any parent around is going to be annoyed by that stat. And because they're watching everything on YouTube, they'll watch YouTube on their phone sitting in front of a TV that has the YouTube app. It's just amazing. It never ceases to
Mhm.
amaze me. So cable and satellite TV, we saw a decline. Not super significant, but a decline. Older consumers still rely heavily on that. I mean, again, we're watching TV. I still have cable. It's YouTube TV, but this is still something that's heavily prevalent in our age group. But we need to make sure that we keep pace. So we need to understand that if the members don't see you, they don't consider you, and if they don't consider you, they're gonna default to the brands they do see. If
Yeah,
you
and Kristen, what something that stands out to me here is that for those under 45, they're getting hit with credit union ads, and they can recall that they've been hit with credit union ads,
Yeah,
right?
and where they are, right? Which is,
Right.
like, why we're seeing that jump in social media and YouTube and the like. So,
Yeah,
um,
but we wanna see this up, right?
we
Right, we
totally
wanna see, yeah, where are you seeing credit unions, discuss? Where are you running into them? Where are you encountering them? So, we gotta keep at it.
and consistency also matters, right? And just like, we're gonna go into the whole mobile app thing and how important that is, but consistency really matters to this generation. They think that I think this last stat I read on how many times they need to see something before they make a decision is something crazy, like in the 20s, 26 or something. When I started this career 12 years ago, that number was 7.
Yeah,
So
7 to 10. I mean, it's just but why?
and
Because there's so much more hitting our face and our eyeballs
it's
every day compared to what it
everywhere.
used to be.
It is
Yeah.
everywhere. It is everywhere. Sweet. So, here we go with mobile apps.
Mobile apps overtake branches is the top loan channel for younger consumers.
Okay.
So
Behavioral preference. And I hear this all the time from credit unions, all the time. Something that they really see is people join to get the rate but if the mobile experience isn't good, they're out and they don't fund or they just become one of those inconsistent members that they don't like, right? Like that's all real-time stuff that we hear. So the mobile app experience is vital. Younger consumers that under 45 demo, they don't see it as a like a channel. It's the primary channel. It's where they do their
it's
business. They check their
yeah,
balances, they monitor spending. This is where they're making their decisions, and it's happening in real time while they're inside the app.
yeah, yeah, and I mean, this, in-person branches had the edge only 3 years ago,
Yeah.
31 versus 27, and now it's overtaken. I mean, certainly a trend, they're still close. Again, we're not trying to say in-person branches don't matter anymore, but, you see that horse starting to get ahead a little bit.
I mean, even in my geriatric demo, I can't remember the last time I went inside a branch. So, yeah, I think that this is crucial. And I also think it's crucial to think about this as a term of a revenue channel instead of just something that you have to have. This now needs to be viewed within a
Yeah,
union as a direct revenue channel. And if you're
yeah,
not thinking in those terms, it's time that we start thinking in the term in those terms. And
yeah.
make sure that your mobile app is doing the things that it needs to do in order to generate you revenue. Like, we're looking at how many completions, how many new members, how many everything, and we've got to separate out those demos, right, and look at it from the mobile experience too. It's just nuts.
Yeah, and honestly, I've been giving this advice, I think, since 2017. I think everybody who works in a credit union should be a member of a neobank. I
Yeah.
think you should I think you need to feel and experience what these other institutions have to or these other companies rather have to offer, right? And what it's like to move money around on these neobanks, and you're not zooming in and clicking small buttons. You get to slide something over that says confirm deposit into a savings account, and then you see the confetti rain down from the top. It's a fun, easy it's a very familiar experience to younger folks like myself, and so credit unions need to be on par with that, in our opinion, in order to not seem so antiquated.
Yeah, and so I just refinanced my daughter's car with a credit union in Richmond. And I went through the whole process. Everything was great. I had the confetti coming down. The mobile experience was awesome. Loved the whole thing. The sticking point was fun. It's kind of a long story, but I had to open up another account. But that was the sticking thing. I funding that account to get the loan. So I had to go in. Well, I didn't go into a branch. Sarah went into the branch, but we had to go into the branch to fund it. And I was like, thinking to myself right in that moment, if that was one of our kids, they just wouldn't have done that. And they
Yeah.
probably would have gone someplace else. Even though I had the confetti, I had all the things, I did it all online. Second I hit that friction point of funding the account, they would have been out.
Yeah, and Chris, I think this is where everybody needs to kind of shift their mindset on it, is the things that we used to consider a standard part of the experience are now considered friction points to a younger demographic. Right?
Well,
Of
yeah,
course, you have to walk into the bank to do this thing. Of course, I did it. My parents did it. That's just the way life is. And now it's a friction point, and that might be hard for us to initially understand. We got to meet them where they are. So let's talk about one of the last slides we have here is this concept of repelling younger non-credit union members. So what would prevent you from choosing a bank or another financial institution besides rates? We take rates out because that can be an obvious one,
right.
right? Fees, and
Fees.
again, this is where credit unions can potentially shine, right?
Er,
Security issues, big
yeah,
one. Online review. So mobile app, absolutely. This is the under 45, and half
yeah,
of them said yes, absolutely. So that's definitely up there.
but
Just
online
as
reviews
meaningful is online reviews.
for sure. They're always checking reviews, and there are reviews or getting a good online reviews are seriously important to credit unions we do a lot for that. I hear that all the time, and really can make the review process pretty seamless, but they are a huge driver for that under 45 demo reviews.
Yeah. Yeah.
And,
And you
um,
know what? We've heard credit unions who are hesitant to go after review acquisition campaigns because they don't want the negative reviews coming in, right? So, I
you
mean,
don't
like
know
it's
what you don't know.
yeah, look, you're going to get the reviews either way. And if you're afraid of a lot of bad reviews coming in, then maybe you got more foundational issues that you gotta and institutional issues you have to address.
For sure.
But
Word of
anyway,
mouth
I'll
too. The
yeah,
other word of mouth, which that's just the credit union language too. So it's an industry thing, word of mouth. You guys are gonna tell everyone that you have a great experience within the credit unions, and same with your members. So it's a great way to think about how important word of mouth is as well as reviews, because it's how the credit unions operate as an industry. So just put
yeah.
yourself in their shoes. It's exactly how you guys operate inside is how you're viewed on the outside.
Yeah, that's great. Yeah, someone just made a comment that their tellers hand out QR codes to
Yeah.
leave reviews. Right? You can do this in an automated way as well with some marketing automation that triggers off of a certain event, and then those reviews can come in.
And you can pick which platform that they put it on, and then,
Yeah.
if they bounce off of that or they don't do it, certain platforms will keep sending different mediums, whether it's a text message or an email or even in some cases a call to get that review.
And also, you could also have a middle step, Kristen, where first you ask kind of like, how would you rate us 1 through 5? And if they do the 4 or 5, you kick them over to the review platform. If it's a lower number, you kick them over to, a form to explain, to like reach out, like we want to make it right. So you
Yeah,
kind of address them where they are, depending on that kind of intermediary step in the review.
yeah,
A lot of ways you could do that. And we've done that kind of stuff for a lot of clients as well.
yeah, that's
We're wrapping up here. There was a question that came in. If there are any other questions, please put them in now. And then, of course, you can reach out to Kristen if you want to book a meeting, talk about any
yeah,
things we talked about today, how we might be able to help you. There was a question around
yeah,
which neobanks are doing the best. What can
yep.
credit unions look to for inspiration? I've used Betterment, I've used SoFi, I've used Wealthfront, I've used Robinhood. I I would give the edge to Wealthfront from a digital experience point of view. I think Wealthfront does a lot of things well. Robinhood is coming at the younger market from a different direction because Robinhood built their user base on investing and stocks, right? I mean, you can even do
Oh,
Bitcoin through Robinhood, right? So they've got that entire user base from that activity, and now they're moving over into banking as well. That's a new platform. I think it's waitlist only right now, so I
I
can't
just
speak
did
to it. But
so
if you use Robinhood, if you've ever invested on Robinhood, that's a very, very well done platform. I would expect that their banking platform would also be good. There is a little bit of user experience friction that we see with online only banks. So for example, you can't write a check from these accounts. You can have a check sent because again, they're not a bank, right? So then if you log in, you can actually see which bank your money's in, and then you can have a check sent, but you can't just simply write a check. If there are other things that sometimes, like you need to get sign off from someone at a bank, go around an account. So now you got to go through their customer support line, and it's a little clunky and it's not as easy as going to a credit union. But I think if you're trying to experience great online platforms, Wealthfront's great. I think to see what Robinhood's doing. SoFi really markets to the younger demos, at least originally, because their whole thing was around student debt and kind of building products around, people
yeah.
coming in with student debt. Better
Refinance my kids' student loans through SoFi, and they were awesome, and so they did loan consolidation, gave us a better rate. I have, like, a one payment, and they gave me the time span it would be to pay it off, and then if I paid more, and so how long it would take, and it took 10 minutes.
Yeah, I think when things are going smoothly and there's no issues and you're not trying to do anything too complex, the online only banks are fantastic. When you
Yeah,
have to get into real banky type stuff, they're lacking. And I think that's why we saw the customer service was rated low amongst even people who don't use credit unions as their PFI. So that's certainly an edge to play up. But again, you only need it when you need it, right? And
Right.
other times, if it's a day to day thing, to your point, it's really all happening in the app. And that's where things need to be really solid. So I'd recommend starting with one of those top ones
Yeah.
uh,
And just
and seeing what you learn from it. Excellent. All right, everybody. Well, thanks so much. You have the report. There's a lot more in there. There's, I think, 40 charts overall. We only were able to cover a few. So go ahead, look at that. Reach out to Kristen if there's anything you want to talk about more, or if you want to have gear help you. Otherwise, we hope you enjoy the report and that you have a great rest of your week. Thanks, everybody.
Thanks.